talking about meeting your client's needs, one of the things we want to talk about today is the benefit of using a reverse mortgage for purchase to buy a new home. As other speakers mentioned, many older Americans are buying new and existing homes, some using all cash, some conventional financing, but more and more are using a reverse mortgage to purchase their retirement home. We call it an H for P. First, let's look at the market. According to AARP, from 2011 through 2029, over 8,000 people per day will turn 65. That's 2.8 million per year. Housing starts for 55 and older borrowers, as we see right now in 2016, are about 230,000 for new homes for buyers between 55 and 74. That number is expected to be over 250,000 by 2025. That's more than a decade in which about 20% of all new homes will be built for or bought by people that are 55 and older. So there is a huge opportunity in this market. The other thing about this product, not all older Americans, and of course we've already spoken about the traditional HECM product, but not all older Americans want to stay in their home, their current home, forever. But they may also not have the cash to purchase a new home or have the desire to have traditional financing. But they may also not have the ability to be approved for traditional financing because of the QM rules that went into place just a few years ago. Let's take a look at how this cohort currently purchases a home and then how it compares to a HECM for purchase. There's three ways to buy a home. There's two that are being used pretty much in the mainstream today. First is all cash, where you own the home free and clear, but what it does is it ties up a large portion of the borrower's assets. Or, of course, traditional financing, which is an option to make a minimum down payment and limit upfront investment. It builds equity as they pay down the loan. But those monthly mortgage payments may diminish the borrower's cash flow. So to restate it, often many older Americans do pay cash for their homes, but they may simply not have enough in savings, or maybe they simply won't clear enough from the sale of their previous home to buy the home of their dreams. And even if they do, they may be dramatically depleting their retirement assets to do so. Some may go the traditional mortgage route, but with many older Americans on a fixed income, as I said, QM rules make it harder and harder to qualify them, and they may struggle to make the principal and interest payments. Like Dan talked about earlier, the HECM for purchases allows them to make about a 50% investment and does not require monthly payments, although they can be made in any amount whenever they wish, all while retaining a significant portion of their assets. So as we see in the right-hand column, no monthly payments on principal and interest gives them the flexibility to get the home they really want and allows them to keep more assets to use as they wish. Now let's look at some of the numbers. So let's take a 68-year-old borrower who is looking to buy a $350,000 home. So our 68-year-old borrower, right in the third row, $350,000 purchase price, they're bringing less than $165,000 to the table. And remember, this borrower is not making a monthly mortgage payment. And they're able to buy that $350,000 even if they had the $350,000, but they're retaining $185,000 of their assets. I also like to look at this purchase price and the age of 73 at $500,000. That's a pretty powerful number. A $500,000 house, a 73-year-old can buy a $500,000 house, I like to say, for half price. Almost any of those age borrowers can buy a $500,000 for a $500,000 house for about half price. In the case of a 73-year-old, we're looking at less than a $220,000 investment. Wouldn't we all like to get a $500,000 house for $220,000 or less and pay only and not pay principal and interest payments? Let's look at what our research at RMF has shown. More shoppers become buyers. A substantial percentage of H4P buyers would not have purchased if they were not in the H4P program. It gives the potential customers purchasing decision because of their liquidity position with the H4P. What that basically says is what a lot of our folks have shown, especially in places where we market the HECM for purchase in model homes. Folks who are coming in just to see what the house looks like, or just to see how much it costs, or what the lots are like, or how big the homes are, not necessarily even thinking about purchasing, are purchasing because of the H4P product. It gives them additional spending power because they want the nice upgrades and they want maybe the bigger lot or more square footage in the home, better neighborhood. And finally, because it eliminates the need to make regular principal and interest payments, they're able to fund their retirement by using those other assets that they didn't have to use to buy their new home. So in conclusion, we started with talking about the housing market and the fact that it is booming, especially for 55 and over. Over 500,000 new housing starts are going to be for the 55 to 74-year-old community in just a few short years. We talked about 3 ways to buy a home, all cash. We also talked about traditional financing, but some borrowers on a fixed income may not qualify to do the traditional financing route. And then, of course, we talked about HECM for purchase. The fact that it only requires approximately a 50% down payment. And finally, it gives them increased buying power and the ability to retain a larger portion of their assets, and they still don't have to make a principal and interest payment. So that concludes our HECM for purchase segment of today's call. I hope you enjoyed it. Thank you for joining. Bye-bye.